Costco's Q4 earnings came out after the bell. We'll get into them on today's show. We'll take a look at some of the revenue estimates as it pertains to the upcoming quarters. Obviously, we'll go through these Q4 numbers as well. Take a look at the revenues, the profits. We'll look at the balance sheet. We don't get a cash flow statement, at least from the initial results over at Costco, and you don't really need it. We'll talk about the all-important membership fees at Costco as well. Analysts assuming that this company is probably going to raise those membership fees. I didn't see that in the press release. Possibly on the conference call, you might see that. And then we'll look at this from a technical perspective as well. This stock has just been running really for the last 30 or 40 years. And we'll talk about it. It's towards the top end of a channel, but it's not always the worst spot. Obviously, when a stock has just constantly gone up, it's never a bad time to accumulate the stock, but there's probably better times than others to accumulate Costco. And we'll talk about if now is a decent time. Now, during the regular session, the stock was down 1.2%. I'm seeing in the after hours, it's down about 2% or about $10 per share. We're closer to $477 per share on this stock, at least early in the after hours. These things obviously can bounce around quite a bit. Now, those Q4 numbers came in. We'll look at them here in depth here in just a moment. But the high level, the revenue came in right as expected. In fact, it beat expectations by about $90 million. You had about $72 billion worth of revenue in the quarter. That was 15% year over year growth. There's a reason why this stock just continues to climb and climb and climb. Now, another reason why is Costco hasn't hiked up their membership fees in a while. And if you've been a fan of the channel or you understand Costco's business model, they essentially do a kind of a single digit margin on those $72 billion, or in terms of product sales, closer to about $71 billion on those net sales. And so the vast majority of operating profits actually come from those yearly membership fees that people pay in order to shop at Costco. So any hike there really flows all the way down to the bottom line, minus some kind of churn, some people that don't feel like renewing at a higher price, but obviously you have new cohorts coming in at a higher price as well. So those membership fees are so critical for Costco's success, certainly from a profitability perspective. Now, from a valuation perspective, this one's trading at a pretty high valuation. We're trading at one-time sales. And I know a lot of you are sitting out there and saying one-time sales, that's nothing. Well, obviously, compared to a tech company or other stocks that we look at here on the channel, we looked at Nike and Lululemon the other day. Those stocks trade at 3 to 6 times sales. Costco trading at one-time sales, certainly compared to other stocks, not wildly overvalued, but compared to itself, over the last 10 years, it's gotten as high as 1.25 times sales, but normally this stock actually traded at a fraction of sales, like less than 0.75, really close to 0.5 times sales. So this one's gotten pretty expensive. And if you believe we're going to go back down to like a 0.5 to even a 0.75 times sales, well, you've got 20 to maybe even upwards of 50% downside on this stock. I'm not sitting here predicting this, but if you buy this one strictly on the price to sales multiple for this stock, it's certainly not cheap whatsoever. Now, I will get back to the revenue estimates here in a moment, but I did want to touch on the fact that we had $72 billion worth of revenue, really close to $72.1 billion. Again, that was up 15% year over year. Last year, you were right at about $62.7 billion worth of revenue. Now, this is the fourth quarter, so we kind of get a broad overview of the last year. You went from, we'll call that $196 billion worth of revenue, all the way up to $226 billion of revenue. Now, before we run through and get to profit and take a look at kind of the dividend coverage over at this company, obviously you get these special dividends with Costco as well. Every couple of years, they do a special dividend. I don't necessarily think we're expecting one this year, but certainly by next year, you might get a special dividend over at Costco. Could be another reason why people are willing to pay a slight premium in terms of its price to sales multiple. Now, those revenues in the most recent quarter came within expectations, okay? 25 analysts cover this stock. The high-end analyst was up at $73.8 billion. The company just came in at we'll call that $72.1 billion. So they did beat the expectations by about that $100 million or $90 million mark on those revenue estimates. So that was 15% growth. But what Wall Street has this company doing over the next several quarters is kind of pulling back on that growth rate. Obviously, there's some tough comps and things like that, but you're going to go back to kind of a high single-digit grower really out into the future, all the way out into 2024, at least according to most analysts. Obviously, the upside for Costco and certainly its shareholders is some kind of upside push where you can maybe get back into the double digits when it comes to this year-over-year revenue growth. The downside is if Costco, quite frankly, just meets these or maybe doesn't even get close to them. Maybe you're kind of at a mid-single digits, let alone a low single-digit growth rate. Well, that certainly could pull the stock back quite a bit because, again, compared to itself, Costco is pretty richly valued at the current time. Now, let's walk through the most recent quarter again. So we had $72 billion worth of revenue, merchandise costs coming in at $63.6 billion. That's off $70.7 billion worth of net sales. This is one of the reasons why so many people shop at Costco, because off of $70 billion, we'll call that even close to $71 billion worth of sales, they have nearly $64 billion worth of merchandise costs. So they're making a razor thin margin on whatever they sell there. But obviously, they have these $1.3 billion worth of membership fees. And that's where a lot of the operating income comes from and the operating income gains. Because notice you also have selling, general, administrative, all the employees and all the back office that Costco requires to operate its company. Well, that came in at $6 billion. So you take $6 billion and plus 63, and you get to a number so close to 70 that it's almost a rounding error. But you do generate, I don't want to discount the fact this company doesn't has single digit margins on its product sales. It still flows down, but your operating income, notice over the last year, you went from $2.275 billion up to roughly $2.5 billion worth of revenue. So you bolted on roughly $200 million on that operating income side. And a lot of that comes from these membership fees where you bolted on almost $100 million on those membership fees year over year on a quarterly basis. You see here for the full year, you went from $3.8 billion on those membership fees all the way up to $4.2 billion. So it's just really critical. This company obviously keeps the members it has very little churn, but obviously signs up new ones. And then any $5, $10 increase is just going to flow all the way down to operating income. That's what has investors excited and probably paying a premium for this stock is number one, you get those special dividends, usually every 2 to 3 years at Costco. And then on top of that, you get those membership fee increases as well. And this company has just proven over a long period of time, people simply don't cancel when those membership goes up. And certainly in a time like we are today in an inflationary moment, well, people are probably even less likely to give up shopping at an outlet, which really is selling you the goods for almost what they buy them for, plus operating expenses. Just a beautiful business in a lot of different economic climates. Obviously, we saw this do really well during boom times, and it's doing relatively well during the tough economic times that we find ourselves in today. You're in $4.20 per diluted share. Wall Street was expecting about $4.17. We do have strong earnings growth heading into late next year and the following year. My guess is that probably there's some analysts that are anticipating membership fees going up, and so they're probably baking this into their earnings growth as well. But it might not be priced into the stock to the fullest degree. For the full year, you're in $13.14 per diluted share. Right now, the company is paying you just $3.60 per share on that dividend rate. So this company this company could almost triple its dividend and still have plenty of money, but they tend to reward you with those once a year special dividends. Those come around again every 2 to 3 years. The total number outstanding shares over the last year went up just fractionally. I would assume most of that is through executive compensation and maybe some employee compensation as well. From a balance sheet perspective, there is so much to like here as well. You've got plenty of cash, well over $10.2 billion. You have a lot of merchandise inventory as well. My guess, okay, over the last year, you went from $14.2 billion up to roughly $18 billion worth of revenue. My guess is Costco's in a very similar situation as Walmart when it comes to inventory. They're having to continue to drive up their inventory because food cost is going up rapidly, and that's the items that are going in and out of Costco likely the quickest. And so the inventory that's going in and out of Costco that is also going up in price the fastest is that food inflation. You see a stagnation or maybe even a decline in food prices, while all of a sudden this inventory number might not seem what it really is. Certainly when we're looking at clothing retailers and even like a Walmart in particular, but certainly clothing retailers or hard good retailers, increasing inventory, not really that good. Over at Costco, I'm not really that concerned. This isn't that big of an inventory build. And again, my guess is a lot of that has to do with food inflation. The fact that month over month, they just have to constantly pay more for this food that they're bringing into the stores. Now, from a liability perspective, they do have some long-term debt sitting right at about $6.5 billion. This company has plenty of cash. I mean, this is one of the most financially healthy companies that you'll look at this size. And that's it. Costco is one of the most basic companies to understand from a financial perspective. If you have young kids or if you're trying to teach yourself or somebody how to read financial documents, Costco and Apple would probably be the two places I start. They keep it very, very simple, at least from their quarterly earnings reports. Now, from a technical perspective, not a whole lot to see here. We've been locked in like a forever uptrend when it comes to Costco. Now, some of you might say, we talked about how from a price to sales basis, the stock is relatively richly valued and it's towards the top of the channel. Now we're pulling back. And again, in the after hours, I'm seeing we're down now 3% in the after hours, down to $472 per share. That would put you right about here where my cursor is right now. I'll draw this black line in a little straighter. That's where the stock is right now. So you're still towards the top of the channel, but I do want to point something out. From August of 1997, boy, I'd love to go back to 1997, especially knowing what I would do now. I would probably buy a lot of Costco stock. Really from 1997 all the way to 2008, I mean, forever basically, this stock traded at the top of that channel. And obviously looking back, you could have got it at a lower price after the great financial crisis. And it took a little while, took all the way, quite frankly, all the way back into 2013, 2014, until you kind of got over these price levels to a meaningful degree. But I just want to point out, just because a stock like this is near the top of the channel or at the top of its kind of longer term channel, not necessarily the worst place to buy the stock if you are buying Costco to sell it over the next year, 2 years, 3 years, maybe even over the next 5 years. This wouldn't be an area where I would buy it. But if you've got a 10-year, 15, 20-year outlook on a stock like Costco, I would just drip into this one. And then obviously, if you have some major decline on this stock, like a lot of people are just expecting the broader market to sell off, well, Costco is probably not going to be immune to that. And if you can get it down here at the bottom of the channel, which in the shorter term would take you right around probably a $400 price target on this one, well, then you add a little bit more. But this is a stock I think you can comfortably just continue to add to, like an index fund or a passive investment. I think you just constantly drip into this one, maybe smaller amounts. And obviously, if you have a larger pullback with a stock like this, I think you move in a little bit more aggressively. The fundamentals are just sensational with a company like this. Again, in bad times and good times, the dividend coverage is as good as you'll see. The balance sheet is plenty healthy, nothing to be concerned about at all with this company. I totally recommend just dripping your money into a stock like this. Doesn't necessarily have to be the cornerstone of your portfolio, but I believe personally, every portfolio has a room for a stock like this. And then when those all important membership fees eventually get hiked and then you get awarded a special dividend, likely pretty soon based on those financials and the dividend coverage, well, that's just the icing on the cake when it comes to Costco. Hopefully you guys enjoyed today's video. We'll be back again soon, tomorrow, in fact, with our Friday Fang Stock Recap show. Until then, good luck with your investments.